Let's connect with CK Venkataraman, Managing Director with Titan, to understand how things have transpired for Titan for the quarter gone by. Good morning. Thank you for joining us. Finally back at office, or this is still home?
No, we've been back in office from June of 2020.
Okay.
But for some lockdowns.
The frame was looking different. Normally we interacted with different backdrops. I was just reconfirming it.
No, this is the office.
Okay.
Very much.
How things looking on the demand front? There was a opening trade which in a sense really took profitability up for Titan. For the quarter gone by, let's understand the big picture. Brokerages are saying that there is a miss on margin, but would you agree with that?
Actually, we look at a year as opposed to every quarter. And if I look at FY22 as a whole, it's been exceedingly satisfying, including how the quarter four ended as well, because we look at it holistically. So our sales growth for FY22 is upwards of 35% on a base which was pretty normal. The jewelry business in FY21 itself had recovered to nearly FY20 levels. So on that base, we are upwards of 35% growth in sales, very satisfactory. Our profit growth over FY21 is more than 100%. Over FY20 is more than 40%. Very, very satisfactory. So quarter four of FY22 obviously was a challenging quarter because of wave 3, because of the global crisis in March, which put the price of gold in a spin, rising a lot and also being very volatile. Very natural that people in the jewelry market don't buy at that time. And therefore, a decline in sales in quarter four is something that we are not at all surprised by. What we give a lot more weightage is to our competitive position in that industry, which we keep tracking all the time. And we believe, and we are very confident, that keeps rising, which means from an ability to compete much better, continue to compete much better in the future, quarter four has been one more step in that direction. So FY23 is looking very, very good for us. And like I said on the call, we have begun April on a very good note. So all cylinders firing for all businesses. Everything is on top notch, top gear, I would say.
I'm guessing Akshay Tritiya sales also must be pretty good, Mr. Venkat?
Yes, it continues to be as good as what I spoke yesterday evening. Very, very confident about how April and early May are showing signs. And I think, the issues which clouded quarter four, and particularly COVID on the one hand, and the intense global crisis, which was in its early stages in March, COVID is not looking like it is around us. And the global crisis has considerably watered down. And therefore, the environment is very, very conducive to growth.
Has the uptick in inflation aided to more rural demand coming up? There are two ways to look at it. If there is inflation, at least in semi-urban and urban sectors, it means that there is an uptick coming on the agrarian front. There is an uptick coming at least in some of the manufacturing sectors. Has that translated into demand coming back?
Actually, we've been penetrating deeper and deeper into small towns. And when I was reviewing just a list of small towns that we had reached into in the last 6 months of FY22, there were so many towns one had simply not heard of, where we are putting up large stores of Tanishq and doing pretty well. Yes, I think the Bharat story is very strong for Titan Company across all formats. And we are seeing that playing out month after month. And particularly in this quarter, in April-June quarter, there'll be a lot of semi-urban rural weddings, which we will certainly benefit through.
Venkat, the jewelry part of the business seems pretty sorted. But what happens to watches and eyewear segment? Is there a tactical strategy here, the big picture? Anything that you've strategized? I mean, I know you incurred an EBIT loss this quarter, but I want to know what really is the story 4 quarters from here.
See, if you look at the watch business, the watch business is a 30-year plus business, and in a time like this when virtually everyone, I mean, you were asking me whether I'm sitting in the office or at home. Most people are sitting at home still, right? So in a situation like that, the demand for a new watch and different kind of watch is actually on the face of it low. So it's the most challenged category, I would say, out of all the categories that Titan Company has today. And therefore, it needs to be treated in that perspective. And a company which is very prosperous otherwise needs to give a little bit of rope to categories which are of that nature, invest in them, make them stronger for the future, as opposed to getting in all worked up about each part of the portfolio. So that's the way we are looking at every single portfolio in the company. And therefore, the investments that we believed that we needed to make in retail transformation, in distribution support, in marketing investments, and also in the wearables business, where we are starting to do much better in the last 6 months. So those investments will necessarily bring the profitability of the business down in the quarter, and maybe to some extent even in the year. But then we need to take a slightly longer term view on the basis of the overall prosperity of the company. And that is the long-term view that we should be taking. So a company which makes more than 3,000 crore profits, for a division which makes 300 crore profits, can we support that division to get much better with a 50 crore, 75 crore support? Or another division which makes 50 crore profits, can we give it a 25 crore support to make it much stronger? Because the eye care opportunity in this country is huge. The Titan Eye Plus brand is so well positioned, and therefore not worrying about one quarter's EBIT margin dilution versus looking at a 2-3 year window for a category like that, or a 2-3 year window for a category like analog watches, which are intrinsically an accessory which is under some kind of pressure. So those are the decisions that at the center level we make, and therefore look at the whole in a way, and not get so much stressed about some of the parts at a quarter level suddenly. So that's the reason why the investments, for example, we do a conference called the Business Associates Meet every 2 years. About 1,000 of us in each business gather together, often abroad, to celebrate, to plan, to bond. And we did it in March for the eye care division after 3 years, and it has generated so much of goodwill and energy and positivity and esprit de corps, and the result of that will play out in FY23. But the cost of that, it's a 10 crore cost for a division which makes 60-70 crores, so it looks like a big hole in that quarter for that division. But you have to look at it from a Titan Company point of view, and from an FY23, FY24 point of view for that division as well.
Okay, so let's see how that offsite pans out and how it impacts the eyewear division. Good morning. What we've also seen in the conference call was very bullish commentary that FY23 is going to be a grand year. Ambitious targets will be set, which will be met. Maybe more details will be known on May 13th, the Analyst Day. But anything you can tell us when it comes to what you have been calling an ambitious growth target for the new year?
I said that even on the call yesterday, which is that, we have had concrete statements about our ambitious targets in the past. Over the last couple of years, we're refraining from that and, speaking about it in abstract terms. And I spoke to one of the callers yesterday to reflect back to the past to see whenever we said ambitious, what we actually meant, and maybe sort of read between the lines. I would, give you the same answer and perhaps wait till the 13th for a more concrete response on this. But, if I were to just give you a sense of it, the jewelry category is a 300,000 plus, a crore plus category. We are less than 30,000 crores, the jewelry business of Titan Company. There is no brand like Titan, like Tanishq in this country, in its multiple dimensions that it has. And therefore, the runway for growth for Tanishq is actually very, very long. So my answer would be sort of subsumed in that kind of statement, which is we are a sub a 10% market share brand with a huge opportunity for growth in a category which can go on for a couple of more decades without losing steam, especially as India moves in the $2,000 to $5,000 per capita growth in the next 5 years. And there is no brand really speaking like Tanishq in the country. So you can imagine what all is possible. This company is very well known for its execution track record as well. And you can just imagine the possibility in terms of what that ambition can specifically mean.
Devil's advocate and talk about your other businesses which you've incubated. While, when I was tracking Titan, when I started my career, it was a watch company. It became a jewelry company, and that has become the mainstay. But if I look at your recent forays, whether it's eyewear or even the perfume market, the big picture is still the same. India is a country of blind. All of us need more glasses, and that's the big picture, which in a sense was the reason why you moved into eyewear. The same logic when it comes to the scent or the perfume market. But those two diversification have not really translated into big picture getting converted into profits or sales. Why is that?
Actually, you're right about the eye care business in the sense that the short-sightedness problem in this country is very large, and therefore the latent opportunity is very high. But if you look at the actual sales of spectacles in this country and the market share of Titan Eye Care, frankly, we are doing very, very well on that front. And it is a fact, and it is a fact that we are trying to grapple with, that a very large part of those who actually need glasses are not either aware that they need glasses because the power is very low or too poor to afford glasses. And that's how the real opportunity is not getting converted into a market. But if you look at the industry, and Titan Eye Care's play in the industry in terms of share of sale as well as the share of profit pool, we have done well for ourselves. It is just that that industry is very small compared to the jewelry industry. And therefore, despite our being the leader there, despite our making a decent share of the profit pool, the contribution of that to the Titan company is low. The perfume business, actually the perfume business in this country is very, very small. We are far and away the leader in the perfume industry. And the deodorant industry in this country is huge in terms of volumes. And it has been our intent to upgrade a lot of deodorant users to perfumes. And we have not succeeded as well as we should have, we could have. And the sari business is 4 years old, very large category, unlike the first two that I spoke of, and big ambitions for international, for saris, for perfumes, all that will be showcased on the 13th. So if you can bear with me till that day on answers to these specific questions, please.
Okay. Great speaking with you then today, Mr. Venkataraman. Good to have you on the show as always.
Thank you very much. My pleasure as well.
Thank you.